Good morning, everyone, and welcome to the 𝐾𝐸𝐻 Limited Investor and Analyst Conference Call to discuss the financial results of the company for the quarter and year ended March 31, 2023. Please note that the conference call will include forward-looking statements. These statements are made on the basis of the company's views and assumptions as of this time and are not guarantees of future performance. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the opening remarks of the management. At that time, participants on the webcast may click on the live interaction button, which will be enabled below the media player. Today's session will begin with a brief introduction by the management of the company, sharing their views on the overall company's performance and strategy. This will be followed by a Q&A session. Now I welcome the management of the company represented by Shri Madhu S. Nair, Chairman and Managing Director, Shri 𝗗𝐨𝐻𝐽, Director Finance, Shri Rajesh Gopalakrishnan, Chief General Manager, Ship Repair, Shri Harikrishnan S., Chief General Manager, Shipbuilding, and Shri Shyamkamal N., Company Secretary, to the call. I now hand over the proceedings to Shri Madhu S. Nair, Chairman and Managing Director, 𝐾𝐸𝐻 Limited.
Thank you very much. Good morning to all present in this con call. And as briefly mentioned, I'm joined here with Director Finance, Mr. 𝗗𝐸𝐻𝐽, Chief General Manager, Ship Repair, Mr. Rajesh Gopalakrishnan, Chief General Manager, Shipbuilding, Mr. Harikrishnan, Company Secretary, Mr. Shyamkamal. In fact, we have uploaded a brief presentation on the exchanges, and I'll quickly go through a few of those. In fact, we have touched upon salient and major aspects of the operational events of the year that's been completed. We feel it was necessary and it is necessary to offer a set of clarifications on the financial results, especially which came in the Q4 of FY23. And these clarifications are split into two parts. One is essentially touching upon the operational part, and the other part is a set of financial reasons. Then we have a brief on where the company is presently and what is a broad outlook into the future. We also touch upon the infrastructure projects ongoing in the company and certain novel and green initiatives. For the year FY23, the most important delivery was that of the indigenous aircraft carrier, which was commissioned by the Honorable Prime Minister in August of 2022. In addition to this, there were various other projects like the floating border outposts of the Ministry of Home Affairs, which we have delivered. The final lot has been delivered. We have delivered 7 vessels out of 23 to the Cochin Water Metro, which again was inaugurated by the Honorable Prime Minister, and it's given the company a lot of good visibility and appreciation in the market. And as we are speaking, like 9 vessels have been delivered, 7 in the last financial year, and after that 2 more have been delivered, so 9 has been delivered. The 500 passenger vessel for the Andaman Nicobar administration was delivered. 2 autonomous electric barges for ASKO Maritime in Norway was delivered. And this, while from a financial point of view, are not large projects, but from an impact, visibility, and a future roadmap point of view, very important projects, because these 2 projects came from Norway during the thick of COVID, and the vessels have been delivered now. And these are, once fully deployed, these will be among the world's first fully autonomous ferries. These will be used to transport cargo for this group called ASKO, which is amongst Norway's leading grocery chain group. So they use this as part of the greening and electrification effect. They are calling these water drones. So we are very happy to be part of this project. It's been delivered, and reportedly information coming in is vessels are doing good. Also, these were the deliveries that I just covered. The other highlights have been the 1,200 passenger vessel for A&N administration was launched. We are facing some difficulties on that project, which I can touch upon as we move forward. The most important project that is ongoing in the company after the formal delivery and commissioning of the aircraft carrier is that of the 8 numbers ASW corvettes, which we are building for the Indian Navy. And all these vessels are in various stages of construction now, especially on the hull and the steel platform side. The outfit part is yet to start, just about starting on the piping and other part. But in the last financial year, FY23, steel cutting, keel laying of various vessels have happened on the SWSWC project. 8 numbers, 7,000 deadweight multi-purpose vessels being built for a German client. So that project is also in the hull construction stage now. And these contracts were secured in March of 2022. Also, the company is proceeding with construction of arguably India's first hydrogen fuel cell vessel, which again could be, the company hopes, while this is not a financial point at this stage, but from a technical point of view, the company would be among the leaders in this technology. We are hoping to complete this project by September of this year, September 2023, and start with the initial pilot trials in the backwaters of Kochi. Coming to the financial performance, it's been uploaded. I'm not getting into the details on the financial performance. We have, in addition, we have put a slide which is showing the breakup between shipbuilding and ship repair. And I would think most of the members on this con call would have some queries or concerns regarding a bit of an abnormal dip in the Q4 figures. And I think from the management side, it is imperative that we offer a set of clarifications on this. And these clarifications, as I briefly mentioned, comes from 2 parts. One is an operational and a technical part. The other one is a financial part. So let me first start with the operational part, and then I will request our Director of Finance to explain on the financial part. On the operational part, I'm splitting this into 4 themes. Essentially, I just want the stakeholders to appreciate that in shipbuilding, whenever you get a contract, there is a timeline. After signing of the contract, then you go through design and engineering and procurement of equipment. And then you get into steel fabrication and block making, followed by outfitting when the ship takes shape and the outfitting happens. And then you get into commissioning, sea trials, and ultimate delivery of the vessel. So technically, for a normal ship, for a conventional, simple, straightforward vessel, this initial part from a contract to the design and engineering, and when you start steel fabrication and go with the block making, that's typically about a year, and it's at the end of a year from a contract, maybe around 11 months, maybe around 12 months, maybe 13, 14 months. In that duration is when we actually get into the steel fabrication part. So for revenues to flow in during FY23, company should have secured orders well prior to the close of FY22. And this was a time immediately after COVID when international ordering was largely getting constrained. The initial set of orders happened globally at the top league shipyards in the world, like the Korean and some of those top-end Chinese, Japanese shipyards. And the global market was holding on to finally ordering, while a lot of discussions were happening. The ordering was not happening during the latter part of FY22 because of various uncertainties in the market. But this got released, and Cochin Shipyard could secure only 2 contracts, and that too in March 2022, which was number one was ASCO projects, which I mentioned, the 2 ASCO projects. And then we also received, the ASCO projects were received in FY22, even prior to March. But in March, we received 2 contracts, which were, one was a dredger, 12,000 cubic meter dredger for an Indian listed dredging company, and 8 numbers multi-purpose vessels for the German client, which I just mentioned a bit earlier. So the ASCO vessels, which we received in earlier, we could actually proceed and we could complete and deliver that project in FY22, and revenues also accrued during the FY23. But the other vessels, which we secured, the German vessels and the dredger, could not, in a normal method, they wouldn't transfer into revenues during FY23. We tried. This is the second thing. We tried on that German vessels, because the German vessels, the 8 numbers, 7,000 deadweight multi-purpose vessels, were largely simple, straightforward merchant vessels. We tried to see whether we could extract about 2 or 3 months of steel making revenue out of it. But due to a set of reasons, especially a client nominated design house in Europe could not match up to our pace of requirements on the design and engineering. So we could not actually get any revenues out of the multi-purpose vessels. Similarly, that dredger contract with the Indian dredging company, which we signed in March 2022, we were hoping that because it was all done, we are in partnership with a company called 𝐻𝐶, which is the world's #1 dredger company. And this dredger, it's a big dredger, 12,000 cubic meter. It is being, such large dredger is being built in India for the first time, and under the Atmanirbhar Bharat initiative of the government of India. We're teaming up with 𝐻𝐶, and we're building up this dredger. That contract was signed with the client in March, hoping that it would get effective very fast. Within about April, we were expecting it to get effective. And the first when we say contract getting effective, that is when CSL receives the first stage payment in our accounts. And that is the date from which the delivery date. This vessel is 34-month delivery period. So the delivery date starts from the date of effectiveness. However, this particular project, the clients needed to draw forex loans from Netherlands through the Exim Bank. And that again took a lot of time to get financial closure, because RBI clearances were involved, and all those clearances for the client took time. And while Cochin Shipyard backed it up continuously along with 𝐻𝐶, but DCI, the client, took time till November 22 for those projects also to get effective. So we could not draw any revenues from that particular project also. The SWC project. So these were the projects which we could actually do during FY23, in addition to the aircraft carrier. And we did significant work on the aircraft SWC, but that was all largely in the steel part of it. And the steel part on the SWC turns out much less revenues. There is a financial part also, which Director of Finance will explain. Again, we were hoping to draw a little bit of, after the steel part, a little bit of the outfit revenues, which would have given much more better turnovers. We were expecting to do this. In fact, we were expecting the main engines for the first vessels to come in. It's to come in from Europe, from Germany. And these were to reach Cochin February 2023, so that we could at least install those engines and draw on the revenues. but those due to the Ukraine war situation and certain additional export restrictions on dual-use technologies from Europe, it took a lot of time for clearances. And even as we are speaking, the engines have not been shipped out of Germany. We are hoping that this will be shipped out in the second week of June. All issues have been sorted out. Our mission in Europe, our missions in Europe, and the Ministry of Defense and the Indian Navy has worked very hard on getting all these clearances, and this is also coming in now. So the four large things impacting our operational part was orders which could reflect or turn into revenues during FY23 was lacking. Whatever little bit on the German vessels and the dredger, we could not drive revenues out of those two projects. And we were constrained with the ASW, SWC, and that was again on the steel part. We could not drive revenues out of the outfit part on it. So this was the operational part. There has also been a financial part, which is essentially an estimation rework. And you're aware that the ASW, SWC project was signed sometime back, and now construction activity has picked up. There were certain things needing clarity, and clarity has emerged because all the major equipment purchase orders and orders have been placed for the ASW, SWC vessel. And there were two major sensors. I will use the word sensors, but these are the two sensors for which the ship is actually being built. These two sensors are costing about approximately could be close to 15% of the cost of the project itself, cost of the vessels itself. And now these were initially to be procured in a particular fashion. CSL had actually gone ahead and placed orders for one of these sensor in a European country. And for the other one, also we had actually finalized with another European country. But there has been a lot of discussions due to a variety of set of reasons, which I can't discuss at this point here. But you're aware that this is 8 ships being built by Cochin Shipyard and 8 ships being built by another shipyard in India. So 16 vessels of this type are being built in India. But it has been decided after discussions at the highest levels in the country in the Ministry of Defense, including discussions at the level of the Raksha Mandri and subsequently at the level of Defense Secretary. Decisions have been taken that all these sensors will now be made in India. And this decision has been taken in January 2023. Now, with these decisions taken, with clarity on the all equipment that's been ordered, we had to, we were noticing that this particular project, the steel part or the hull part was of much lower revenue value than a normal template, which we adopt in our normal vessels. And we thought that it is required to have a re-estimation of the project. The good part is we are now very clear, the members, the stakeholders would appreciate that there has always been a bit of a concern on this project because people have raised questions that these projects were contracted at a point of time when the US dollar to the rupee was at an entirely different level. And now with the present forex levels, there's been concerns whether the project will have financial negative impact. But the management is happy to report that the project is actually on the total project. We can say that there is going to be on the revised estimates, there is going to be a significant profitability that will come in on the project. But with the revised estimates, what we had to do is what we did is on the hull part or the platform part or the steel part, whichever way you would understand it better, we have shifted revenues onto the outfit part. We felt we should not recognize that much of revenue on the steel outfit or the hull part. and instead we have shifted it onto the latter part. It is not a reduction in any revenue. The turnovers are being shifted onto the later outfit part. And since we had to do it, we had to, whatever we did in Q1, Q2, and Q3, we had to take it into Q4 along with the impact of Q4. So that entire impact on shifting revenues from the steel part or the hull part onto the outfit part was taken in Q4. So this is why you see a significant dip in the turnover part, and straight away that figure, which Director of Finance can explain. Jose, if you can just explain a bit more than what I have explained.
Yeah, good morning, everyone. My name is 𝗗𝗃𝗠𝗔𝗧, Director of Finance. As CMD explained regarding the operational challenges, there was some hit in the financial impact in the Q4. CMD briefly touched upon that. So what we do whenever we get a shipbuilding contract, the contract price will be split into two parts. Certain part of revenue will be recognized for the hull part. Hull is predominantly the platform part of the ship, and the remaining part of the contract price will be recognized while the outfit part is being completed. So we had, for the ASW project also, we had taken certain percentage of weightage for hull and outfit. But when the construction activities picked up during 22-23, and when the re-estimation of all the project estimate has been reworked, as CMD explained, we felt that we are recognizing slightly more than what is required for the hull part in the turnover part. So we thought we'll make that correction in the Q4. So prudently, so to make it more prudent and in a more conservative basis. So what we did is that we have reduced some turnover part from the hull part and took the entire adjustments in the Q4 for the Q1, Q2, Q3. And that impact is almost around 275 to 280 crores. The entire hit has been taken in Q4. So the result is that the turnover has been reduced by 28 around that level. And the PBT also, that impact is there. And this is shifted to the right. Means all this turnover will be recognized in the remaining part of the outfit. Timing. This is only a timing difference.
So that was a explanation and on the results from an operational point of view and from the financial point of view. I'll quickly jump into a view into the future, and then I'll come and touch upon opportunities and current status on the CapEx projects. We are generally happy to report a good and robust future order position. It's in the slide presented. About 21,400 crores is order book for the company. These are firm orders, and very happy to inform that in addition to the 8 ASW SWC corvettes, the company has now signed contracts for 6 next generation missile vessels for the Indian Navy, and total project value 9,805 crores. The contract has been signed on the 30th of March 2023, and company has also received the initial stage payments. The company has also been successful. I had explained about the dredger contract, and there are vessels further to be delivered to the Cochin Metro. But we are also very happy to report contracts for CSOV vessels from Europe, as also zero emission feeder container vessels from Europe. And in the subsidiary company, especially in Udupi Cochin Shipyard Limited, company has secured orders for 4 tugs under the new approved standard tug design policy of the Government of India. So that segment is looking good in the subsidiary company. So 21,400 crores of contracts, and contracts actually executable and revenue which will accrue in FY24. Because right now, the ASW SWC project on both the hull part and the outfit part, the engines expected immediately, and the outfit part, the dredger contract, the German multipurpose vessel contracts, the dredger contract and the CSOV will all get into execution phase in FY24. So the difficulties which we faced, because in FY23, not having projects which are not getting into the execution part in FY23, that is not there in FY24. We are on much better wicket. Also, looking into the future, order pipeline has been presented in the presentation. We are seeing strong traction from Europe, especially for green vessels. And this is where that Cochin Metro vessels and the ASCO autonomous green vessels becomes very important, because it is those vessels which has actually set Cochin Shipyard on a good track in the West European green shipping circuit. So the CSOVs, which are green vessels, methanol fueled, the zero emission feeder container vessels, as I mentioned, for a company in Europe, which would be among the world's first hydrogen fueled container vessels. And we are seeing many more possibilities coming from Europe. We expect we should be successful in some of these, which are at advanced stages for both execution at CSL Kochi, as also Udupi Cochin Shipyard Limited in Udupi. So in addition, the company is bidding for this month, June. We are bidding for fast patrol vessels and next generation offshore patrol vessels to these are AON to the tune of around 4,830 crores. And there are various RFIs and RFPs, prominently among them the next generation corvettes, the landing platform docks, and other NG, FAC, FICs, all coming in, which we are putting roughly at 35,000 crores of an order pipeline, which probably over the next 12 to 15 to 18 months should be turning into RFPs. So the company feels good, very positive into FY24. Even beyond that, ship repair looking strong. Ship repair also, I did not touch upon ship repair of last year again. Ship repair performance of last year, we had a set of difficulties. We could not, on a large naval project which we took in our Mumbai unit. In fact, that was the first time such a large naval project we took in our Mumbai unit. It was a little bit of an aggressive push to make sure that systems work over there, because it's a newer system over there. But it did not go exactly as envisaged. So there has been a dip in ship repair FY23. And at least one large project which we expected to come to Cochin Shipyard in FY23, it went to a competition elsewhere in the country. This is something which we are seeing recently, but at the price levels at which that project has gone to the other company, we are surprised, and probably Cochin Shipyard would not have wanted that project at that price levels. But the upcoming FY24 on ship repair also looks good. There are some large projects lined up from the Navy for FY24. For FY25, there are larger projects lined up. We had an MOU between Lakshadweep and Cochin Shipyard, which had expired in the past, and it had gone in a different direction because the administration wanted those vessels to be handled in a different directions. But probably they have come back now due to reasons best known to them. They come back, and the MOUs have been signed with Cochin Shipyard, and so that revenue stream is also back. And all in all, ship repair also looks pretty good for FY24. Just wanted to, before I hand over, just also wanted to touch upon the large investment cycle projects which we are doing, a new large dry dock and the international ship repair facility. Stakeholders would be aware, but the new dry dock project being executed by Larsen & Toubro as turnkey contractor, and the big crane to come from Hyundai, Korea. We are expecting the project to be completed by December 2023. And there would be a little bit of the final crane installation and other things may remain, but by mid of 2024, we expect the project to be fully commissioned. The ISRF project had run into difficulties with a failure on the turnkey contracting company, which we had to terminate, come out, encash bank guarantees, and then split it into 3 separate contracts. That's also going good. And December 2023, we are expecting to complete the ship lift and the first 2 workstations. And by mid of next year, the full facility. So the dry dock project is currently at 76% fiscal completion levels. And the ISRF facility is currently at 78% fiscal completion levels. We also mentioned in the presentation certain initiatives we are doing on the zero emission green vessels, the India's first hydrogen fuel cell pilot vessel, teaming up with a tech company in India to develop the fuel cell and the Indian Register of Shipping. Company has secured orders from IWI for 2 numbers electric catamaran ferries for cities in Varanasi, Guwahati. And company has moved forward with a innovative maritime startup fund through being implemented through IIT Madras and Indian Institute of Management, Kozhikode. The company has got board approvals to proceed and develop a fully Indian autonomous surface vessel, which we feel has got a market possibility into the future. The company has continued to focus good on various people initiatives because the company feels at the end of the day, it's all people driven, and both at the executive level who have gone through some of the finest institutes and some of the finest exposures. The workers are also going through various programs. They're also reaching out strongly to people who have retired from the company, to children of the employees. All in all, the whole intent is to have a happy company, productive company, where employees push and employees take ownership, responsibility, and work passionately and dedicated for the company. And company is again happy to report absolutely comfortable industrial relations across all stakeholders within the organization. Just touching upon a particular event which has happened in May 2023, stakeholders may be aware that ministries these days do brainstorming sessions called Chindan Shivers, and the Ministry of Port Shipping and Waterways had its Chindan Shivir 2 weeks back in Kerala. The entire shipping fraternity, led by the Honorable Minister Sri Sarbananda Sonowal, was here. And in line with India's policies, certain decisions have been taken, and this has been announced, this is already in public domain. The company feels 2 decisions are very much in favor of the company. One is enhancement of the shipbuilding financial assistance scheme to 30% for promotion of green shipping. The further exact details are awaited, but presently the shipbuilding financial assistance scheme is 14%. It started at 20%, and in 2 tranches, it's come down to 14%. So if this is 30%, it would be good for Indian shipbuilding. It would be good for 𝐶𝐻 shipyard to get in more orders for green ships. There is a new policy called the Green Tug Transition Policy. I had explained that the earlier approved standard tug design policy of the government of India and insistence of that the major ports procure tugs made only in India has helped the company. The subsidiary company 𝗗𝗘𝗠𝗔𝗃 𝐶𝐻 Limited already secured 4 contracts from Indian private sector to be ultimately deployed in the Indian ports. We hope this Green Tug Transition Program will also help CSL subsidiary companies to actually secure orders in this regard. And CSL is first mover in this space amongst all Indian yards, and we think we would be having a a good traction here. So all in all, while there has been a bit of a disappointment in the financial results of FY23, the reasons which I've explained and which I hope the stakeholders would appreciate, understand, and also very clearly appreciate that it is as a prudent company, conservative on financials, we felt this is the right thing to do. We were aware that it would actually make an impact on the Q4 results, but we felt this is the way to do, because there is nothing on the turnover getting impacted, but it is actually getting shifted onto the onto the project. Overall, high levels of positivity looking at the near future, the next few years, good order book position, good order pipeline visibility, split between shipbuilding from the defense side, shipbuilding from Europe, especially on the green front, and ship repair looking strong with at least a few major orders every year for FY24, FY25 already in sight. So the company feels good into the future, and I think I will stop now and would be happy to take questions. Thank you all for your patient hearing.
Thank you very much. Ladies and gentlemen, we will begin the question and answer session. Participants on webcast may click on the live interaction button below the media player. An operator will take your name and announce your turn. The first question is from the line of Parimal Mithani from Credential Investments. Please go ahead. Parimal Mithani, we request you to please unmute yourself and proceed with your question. Parimal Mithani, we request you to please unmute yourself from your system and proceed with your question. As there is a response, we move to the next question from the line of Dikshit Doshi from Whitestone Financials. Please go ahead.
Hello.
Yes.
Can you hear me?
Yes, we can hear you.
Yeah, thanks for the opportunity. A couple of questions. Firstly, on the execution timeline. So you have given the order book breakup. If you can give a execution timeline for defense, commercial export, and commercial domestic separately. And in defense, if you can mention about NGMV and AHW Corvette separately.
I can give an approximate guidance because it would be difficult for me to explain the whole schedules. But on the ASW Corvettes, as I said, the vessel is the first three vessels are expected to be launched from our dock this November 2023. So it's three vessels simultaneously getting launched November 2023, and the first vessel to be delivered to the Navy in November 2024, and thereafter 2 vessels every year.
Okay.
That's on the ASW vessels. On the NGMV vessels, we signed the contract in March 2023, and the first vessel is 48 months from delivery from contract date, and thereafter 1 vessel every year.
Okay.
On the other main vessels, the dredger contract, as I said, November 2022 is when it got effective. The delivery date is 34 months from contract signing. We are expecting to cut steel for that vessel September 2023. The German 8 numbers multipurpose vessels which we are building, the first vessels, I explained the first vessel from an original contract point of view, the first vessel's delivery was January 2024. That is getting shifted by about 4 months now onto the right. The owners are in it. We have the buy-in over there. So after that, that entire vessels get delivered in about 18 months thereafter.
Okay.
Yeah.
And second question was, in this, we have given the 700 crore approx orders of ship repair. I assume that ship repair, we generally give the next 1 year execution.
Correct.
Okay.
We have actually given a ship repair. You're very right. Like see, we are not in a position to exactly give a figure, but I can confidently say that the execution would be higher than that figure. We can guide you towards a figure of around 900 crores for FY24 on ship repair. We are looking very good.
Okay. And what if shipbuilding revenue we can expect?
Pardon?
What kind of shipbuilding revenue we can expect next year?
We would guide you around 3,000 crores.
3,000 crores. Okay. Okay. And what kind of margins we expect in both the segments separately?
Margins in both the segments. Shipbuilding.
Shipbuilding is around on EBITDA level. Shipbuilding will be around 12 to 13%, and ship repair will be around 18 to 19. So blended will be around 14, 15.
Okay. Now, if I see the results, there were two more. So you have given the clarification on most of the issues, but there are two notes to accounts. One is regarding the shipbuilding contract with Andaman Nicobar, where we have recorded the LD. So, I mean, how much was the LD in FY23, and what is the status of this order now? And secondly, there was some exceptional income of 62 crore. If you can explain that as well.
Jose, can you explain the 62 crore? I'll explain the end.
Yeah. See, we are, as CMD mentioned, we have two major capex. So out of that, one capex is ISRF, that is a international ship repair facility, which we are doing it in leasehold land from the Cochin Port Authority. So there we are paying lease rent every year to the Cochin Port. So we were charging the lease rent to the P&L every year. But this year, what we have done is that, as per the advice from the statutory auditors and the other statutory authorities, since that lease is being taken for the project, that lease rent paid from the date of effectiveness of the environmental clearance, that has been capitalized to the project. So those lease expense we already charged to the P&L has been taken as income, one-off income. That is around 62 crores come as one-off in the Q4.
Regarding the Andaman Nicobar vessels, actually there were four vessels which we concluded with Andaman Nicobar. This was in 2016 March. The Ministry of Shipping and the A&N administration was involved. So there were two 500 passenger vessels which have subsequently been now delivered and are in operation in Andamans. And then there are two 1,200 pax vessels. Now, due to a set of reasons, Andaman Nicobar administration, because of changes in flight preference, travel preferences, improved flight connectivity into the islands, the Andaman Nicobar administration has informed the government that they probably would not be too keen to take these vessels, and they requested the ministry to try and see alternative use for these vessels. Both vessels Cochin Shipyard has already secured 80% payments have been paid for both the vessels, and both vessels are today launched, completed till the deck level, including everything below the deck level. But above deck, we have kept it pending because we are not sure what kind of function the vessel would be looked into. One of the vessels is being looked at by the Indian Navy as a national hospital ship. There have been advanced levels of discussion on one of the vessels. The second vessel is being currently looked at by another government agency, as also a potential use by one of the other island territories in India. I'm not in a position to discuss this because these are all in the discussion stage. But your question, we hope it's been rather difficult for us because these vessels are under a contract. The contracts are still valid. 80% payments have been received, but we are not in a position to move forward and complete these vessels because what exactly, if it's a hospital ship, we have to do a set of conversion and design engineering changes and a conversion. If it's the other national agency also, there is a bit of a conversion. And if it's the island territory which you are talking about, there may be some readjustments that is to be done. But we hope not too late, now that the ministry is also fully involved on this, we would be having a fresh reassignment on these vessels, and we'll keep the stakeholders posted on this.
So how much LD we have recorded already in this?
See, actually, even now, since there is a valid contract with the Antamans, as per these contract terms, we need to provide for LD in the accounts. But since the delay is not because of ours, normally we may not have to pay any LD, but on a prudent manner, we have been providing LD in the accounts, and almost we have, so far we have provided LD almost 20% of the contract price. But now we have decided that further LD we will not provide. So this statutory auditors wanted to disclose as notes to the accounts.
How much is the contract size?
Contract size approximately 409 crores each vessel. So 409 crore into two vessels.
Two vessels.
And this is included in the current order book, or it's right now not there in the order book of 21,000 crores?
It is in the current order book. And not at the
remaining part of execution is there in the 21,600 order book.
It has been
okay, so 80% is already over. The remaining part is there in the order book.
Not 80%.
We have put it as 295 crores is included in the current order book.
So almost 50% execution is remaining to be pending. 80% what CMD mentioned was the
out of 409 into 2, now the pending what we have included in the order book is 295 crores.
Okay. That's it from my side. Thanks.
Thank you. We have the next question from the line of Parimal Mithani from Credential Investments. Please unmute yourself and proceed with your question. Mr. Parimal Mithani from Credential Investment, please unmute yourself and proceed with your question. We'll move to the next question, which is from the line of Aditya Mongia from Kotak Securities. Please go ahead with your question. Please unmute yourself. Yes, Mr. Mongia, please proceed with your question. Aditya Mongia from Kotak Securities, please proceed with your question. We'll move to the next question from the line of Vijay Goel from ICICI Securities. Please proceed with your question. Vijay Goel from ICICI Securities, you may unmute yourself and proceed with your question, please. Mr. Vijay Goel from ICICI Securities, please unmute yourself from your system and proceed with your question. As there is no response, we'll move to the next question from the line of Pratiksha Daftari from Equitas Investments. Please proceed with your question.
So my question is that, we have guided for in the shipbuilding side, EBITDA margins of 12 to 13%. Historically, we've been able to do higher than that. So how does the margin profile change in terms of the stage of project that we are in? And does it have is it very different for the outfitting part, or is it very different for the steel cutting part? If you could elaborate a little bit on that.
Actually, the margin profile what we are actually guiding right now is you are aware that we have had the indigenous aircraft carrier, which the entire stakeholders would be aware that wood was at a slightly more higher margin profile. Now, these days, like both the naval projects we have are coming from competitive bidding basis. The international contracts we are having is from negotiated, but again, competitive basis. So the margin profile on shipbuilding, while the volumes would be there, the margin profiles would be a notch lower.
So going ahead, what would be sustainable margins, or what if at all we were to go ahead with competitive bidding in future projects as well, then what is the margin that we would price in at the time of bidding?
That's a very, very tough thing to answer, because that's actually really in the competitiveness. I will not be able to give an exact figure on that, but then I would think 12, 13, 14% on a competitive bidding. But if the competitive bidding, we sense that it may not have too many participants, or we are having a higher chance, maybe it could be 100 basis points higher. For the international contracts, it could be some of these green vessels, maybe we have again 100 to 200 basis points more. So it's somewhere around that figure. I would just guide towards a figure which is 12-ish, 13, 14 kind of a thing. And then an exact figure, bid by bid, depending on the circumstances, we move forward. Certainly, for example, the NGMV, see, it's a bid with a very high volume, because it's a 9,800 crore contract. So naturally, companies like ours, and I'm sure most of our competitors, would not mind losing 100, 150 basis points lower over there and getting that strength of a large order. But if I'm bidding towards a 200 crore or a 300 crore contract, I may adopt a little bit of a different strategy. That is why I said I can't exactly give you a figure, but it depends. So we have today, from the naval side, we have secured 2 large contracts. And on the first contract, as I said, on the ASW vessels, which again, you're aware, like we had bid at a very tight margin at a time where the Forex was entirely different. And now, to the credit of the company, I can say that we are on that 6,400 crore contract. I can guide you towards overall profitability of more than 800 crores. So I think I would request you to read beyond that at your end. It would be difficult for us to give you exact figures, but I can guide you for more than 800 crores profitability on those projects.
Okay. Thank you.
Thank you. We'll take the question from the line of Aditya Mongia from Kotak Securities. We request you to please unmute yourself and proceed with your question. Aditya, if you unmuted yourself, please proceed with your question. We are not able to hear you. We request you to join from a different handset or a different device. We'll take the next question from the line of Sai Pasupuleti from Kotak Securities. Please proceed with your question. Sai, we request you to please unmute yourself and proceed with your question. As there is no response, we'll move to the next question from the line of Brajesh Chawar, individual investor. Please proceed with your question.
Yeah. Thanks for the opportunity. Good morning, sir. My first question is regarding ISRF. What revenue should we expect from ship repair at consolidated levels post ISRF facility going live? And there is a follow-up question. I'll ask it later. Yeah.
Okay. ISRF, right now, when ISRF goes live, ISRF is 1 ship lift and 6 workstations. We'll go live in December with 1 ship lift and 2 workstations. The other 4 workstations will follow shortly. See, at at the end, the ISRF has been, it's with 6 workstations fully in operation, 70 to 80 vessels per year of a medium size, 130-meter length is the max size of the vessel, is what is proposed to be handled in ISRF. Cochin Shipyard of today handles around 80 plus vessels every year. So in Cochin, with the Cochin Shipyard of today and the ISRF coming in, we expect both together to handle about 140, 150 vessels. It is not exactly a addition because some of the smaller vessels we are handling in Cochin Shipyard today will shift to ISRF. So this is, and we'll try for larger vessels in the main yard in Cochin Shipyard. Now your question, what would be the additional revenue? We would guide like in the initial, I don't want to say the first year, but put it initial 24 months, we should see an incremental revenue from ISRF in the range of say around a 250 crore kind of a revenue coming in. But ultimately, when the ISRF is in full-blown condition, the revenues should be about 500 to 600 crores from ISRF. This is the game plan under which we are moving. Exactly how it will pan out, give us some more time, and we really need to operate that. But then in the first, give it about 24 months. I think we should see about a 200, 250 crore to come in from ISRF alone.
Okay, sir. And sir, my follow-up question is, there is a tight tanker market and global shipbuilding capacity is down 40% from where it was a decade ago. And commercial oil tankers delivery schedule is Q1 FY23 if someone books a vessel in a leading shipyard in Korea or Japan. So what is the company's approach towards securing commercial tankers and dry bulk vessel if there are any orders in the pipeline, or if we are planning to execute some, we would garner some of the orders in this space as well?
It's a very pertinent question, and the global market, especially in the better shipyards, have got tightened. Actually, Cochin Shipyard also with the current set of orders we have and certain things which we are talking, we are also talking well into 2026 at this stage, including we have actually taken in contracts which will be executed in the new dry dock, which will get, as I mentioned, will be completed this year end and fully commissioned mid of next year. Now, the questions about commercial tankers and bulk carriers. See, Cochin Shipyard has always been more comfortable in a niche set of vessels where we are not walking directly into the competitive strength of some of the Chinese shipyards and some of the Korean shipyards. So that is not where we want to go. So the straightaway that commercial tanker and the classical bulk carrier market, there are very strongly entrenched players in the world. Having said that, what we have been looking at, and if you see the order book, like we have actually gone in for the CSOV contracts. These we feel is an emerging new space. After oil going down, the wind energy market has come in, and the commissioning support and operations vessels. Each of these vessels are in the range of 60 million euro kind of vessels. And these vessels can't get placed just like that anywhere in the world. These go only to technically strong companies with European, who are also willing to work along with European technology providers. So we have sensed that CSOV looks a good market for us. The European short sea market, which is what those German vessels are coming from, and it comes in a bit of numbers. You can see the German vessels are eight vessels, smaller vessels, but 8 vessels. We are seeing the numbers. Europe, short sea replacement market studies say Europe's short sea vessels average age profile is 19-20 years, and they will have to definitely change when they will have to go for the greener new generation vessels. We sense more than 2,000 to 2,500 vessels will get replaced in Europe over the next 10 years. We feel there is an emerging market. So the high-tech green vessels out of Europe, the short sea vessels in Germany, Netherlands, these were more interesting to us. than the classical bulk carriers, which profitability levels are much lower because these are classical things which entrenched shipyards can do very strongly. But what we are seeing and what we are evaluating is what we are calling the feeder container vessels. Feeder container vessels are the smaller container vessels because the monstrous big container vessels which gets built in Japan and Korea have gone very big, 14,000, 18,000, 20,000 TEU. So each of those vessels to evacuate would need feeder vessels. And feeder vessels are vessels which would be 700 TEU all the way up to, let's say, 2,500, 3,000 TEU. We have seen strong traction. At least 4 leading companies are talking to us, but CSL we are taking a cautious watch because should we actually go for such vessels or should we go for the more advanced CSOV green vessels? So we are taking a cautious watch over this year as we move forward. We will be, I think our order intake should be all going well, should be good. We are fully aware of this tanker market and the bulk carrier market, but we feel there are, from CSL standpoint of view, there would be slightly better options available elsewhere at this current stage.
Thanks, sir. That was all from my side, and all the best for the future.
Thank you.
Thank you. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead. Mr. Parimal Mithani, please unmute yourself and proceed with your question. So we had seen you had unmuted yourself. Please unmute yourself again and proceed with your question. Yes. Please go ahead with your question. So we are not able to hear you. We'll move to the next question from the line of Raj Rishi from DCPL. Please go ahead. Raj Rishi from DCPL, please unmute yourself and proceed with your question. The next question is from the line of Abhishek Chaurasia from Voyager Capital. Please go ahead.
Yeah, hi. Hello, can you hear me?
Yes, now we can hear you.
Yeah.
Yes.
So basically in your presentation, you have said that we have missed a few major orders. So could you please give us the clarity on that, what kind of order it were and what were the quantum of this order and what were the reason behind we missed it?
That was on ship repair. Ship repair, in fact, see, in Jan to March of 2023, we had actually slotted for a vessel belonging to ONGC. And this is a vessel which we have handled many times in the past. So we were fairly clear on this. Yeah. And that project, our price levels was upwards of 200 crore, but it's gone at least 25% lower price. And that was not something which we were keen on at that levels. Then there was another, again, ONGC project, which again has gone at a price which is about just a notch below 20% lower than our price level. That was also close to a 200 crore, which was a project. Both these projects would have been spread over a year of ship repair work. So these two projects which we have seen, we are a bit disappointed at this because we were in strong position on this. But something which we guided in an earlier interaction also, we have seen a little bit of a jump by some of our competitors into ship repair. We have been in this business 45 years. We understand where the money comes from and where we can lose big time if that is the case. and we are cautious, and we are aggressive at the same time. We are cautious. So the price levels at which these projects have gone, we hope the markets will realize, the clients will realize at a point of time. We already seen something like this on a naval project, which we lost some time back to another Indian defense PSU. And there has been a struggle for that company who had taken that contract. So I can't discuss more on this, but then we've seen a bit of an uncomfortable, aggressive take coming in at what, according to us, with all our experience, we feel are much below cost levels.
Okay. So my next question is on regarding to the recently government is coming with a green ship, right? So are we looking any orders from here? If yes, what will be the margins and all? Is it on the higher side?
It would definitely be, because it is entire green shipping market, which is largely being driven by requirement in Europe, because Europe is going to implement what is called the EU ETS scheme, and green vessels, only green vessels will be able to trade into Europe. If it is, if vessels are not green, they will have to actually pay penalties or buy credits. So there are a lot of shipbuilding requirement coming for such green vessels or hybrid vessels. And since there are not every yard in the world can actually jump into this, there are technology restrictions, there are capability restrictions. So we feel it looks better, and again with support, it could be much better. The margins would be better than normal on such vessels if we can garner more orders. We are definitely talking to many projects across, but probably you also need to understand many of these projects, the green shipping projects worldwide, is also got support from backend from their own countries. For example, Norway, when they do it, there's something called a Norwegian green shipping program. So the governments of Norway actually support those programs. In fact, including the project which we have secured for 2 hydrogen-powered container vessels. Those are supported by the government of Norway by the funding. So it is not, it doesn't flow just like a commercial order, but we are strongly entrenched in this. And I can just report, coming week, the big conferences happening in Norway, and large delegation from CSL is participating in those meetings. A lot of business meetings have been lined up in Europe.
Okay, that's it from my side. Thank you so much.
Thank you.
Thank you. The next question is from the line of Raj Rishi from DCPL. Please unmute yourself and proceed with your question.
A lot of business meetings have been lined up in Europe.
Raj, we can hear you. Please proceed with your question.
Yeah. Am I audible?
Yes, you are.
Yeah, hi. I think at the last con call, Mr. Nair, you had mentioned that early 26, when you leave, you would be happy with a certain level of turnover. Could you just share your view on that, as to what sort of turnover would that be, which would make you happy?
5,000 crores.
Pardon?
Pardon?
How much do you say?
5,000 crores.
5,000 crores.
Yeah.
Okay.
That's what makes me happy. That's a good question, and that's a straightforward answer.
Okay, but sir, I believe last year you had said something like 6,000 crores. So how come the scale down?
No, I'm not sure. Like 5,000 crores, I should be happy.
Okay.
Yeah.
And Mr. Nair, like, what's the edge which Cochin Shipyard has to get the orders in for international orders versus your, say, competition?
See, we have been active towards West Europe. Now this year it will be 20 years. So 20 years we have been very active in West Europe. There has been more than 50 vessels delivered into West Europe. So there are no easy routes here. Our products have done well in West Europe. The trust and the relations we have with a lot of more than 100 companies out in Europe, especially Scandinavia, has been strong. And now when this green shipping market is emerging, see, we moved in initially with the classical markets and the oil and gas offshore vessel segment. When oil went down, that segment crashed a little bit. But now we are seeing high levels of positivity on the green shipping market. And it's the same companies, same friends involved in many of our discussions. So we are seeing strength over there. There is high levels of trust on 𝐶𝐻 shipyard. Again, in this business, you need to have financial strength to raise refund guarantees. Our banking, our balance sheet, our banking connect with the Indian sector is good. We are able to do that. So overall, whatever Europe especially needs, we are able to provide the kind of technical strength, the kind of people strength we have, the kind of openness we have displayed towards Europe. I think it's all coming back and helping us right now, which we feel are major strengths, which cannot be again acquired very fast. It takes time, but I think we are in a sweet position at this stage.
Okay. So the segment of this green vessels in say 3 years time, or maybe 3 to 4 years time, what percentage of your revenue can be from this area?
So there's again a tough one because see, in shipbuilding you can see like even now significant revenue share is coming from the defense side. That's because the defense contracts are always costly contracts because it's with costly equipment. Okay. So from a turnover point of view, that percentage is much more higher. But we would try to see our shipbuilding revenue split between defense and non-defense to the tune of something like a 60-40, okay. Maybe 55-45, something like that. So in that non-defense part, we expect more than 50-60% to come in from that space in Europe. This is what we think.
From the green side.
From the green side.
Okay. And sir, any comments on the possibility of US ships coming to say a company like Cochin Shipyard for repair?
See, this is something again we have been trying for long, and due to a set of reasons, I can say there are national clearances and other things needed. Our units in Mumbai and Calcutta are being evaluated for such requirements, but due to a set of reasons, at this stage, our unit in Kochi is not being looked at. I won't be able to discuss anything beyond this, but unit in Mumbai and Kochi, Calcutta is being evaluated.
Okay. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Manas. We request you to please provide your company name and proceed with your question.
Hi, I'm a private investor. I would like to understand what is the future of the second aircraft carrier, which has been proposed by the government, and the first aircraft carrier, Vikrant. You showed in your investor presentation there's still some 1,800 crores still revenue to be booked. By when will that happen?
Jose, can you explain on the revenue part?
Yeah, the revenue next 2 years, that means current financial year as well as the next financial year, we will book the entire revenue of around 1,876 crores. Because there are post-delivery activities which we need to complete. This is as per the original contract, which has envisaged this post-delivery activities also.
And what about the second aircraft carrier?
See, this is again, there are various discussions happening. All I can say is discussions, there's been heightened interactions and heightened level of discussions. We are seeing much more traction on those discussions. I will have to stop at that because those are discussions which are much at a different level and at a strategic level. But all I can convey is there's been much more positivity and much more speed on some of those discussions in the recent past.
So just to be clear, there is no confirmed closure or a RFQ being released on that?
No, not at this stage. Not at this stage.
So, the expertise that CSL has garnered over the years by building this unique carrier, how are we leveraging that at this point of time?
See, at this stage, the significant expertise that's been built up has been design, engineering, planning, and the skill sets. With the two large naval projects between the ASW warfare vessels and the NGMV, which are 14 ships covering about 15,000 crores. I think we are putting this to good use because various network-centric systems, various technologies, weaponry, sensors. So all these the size and the scale is different on an aircraft carrier, but many of the systems, subsystems, there are other significant things on these vessels also. So that is being put to use. And I also go with your keenness, and we also would be extremely happy, and we are keeping a close tab on discussions on the next aircraft carrier. We hope and we wish it goes in the right directions.
Right, sir. So one final question. As per Government of India, are we allowed to secure defense orders for export in terms of vessels?
We have not really looked at it from that point of view, but yes, the Government of India is keen that Indian shipyards look at it from that point of view for exports. And the government has actually guided also on certain possibilities. But CSL, as of now, our attention is not very much focused on that segment at this stage, because there's a lot of foreign naval orders would mean strong involvement at various levels of the government also. So in fact, we would walk one step behind with the government to actually secure such things. And it may take some more time for CSL, but we are keeping a watch on that, but we are not active in that space.
All right, sir. Thank you very much.
Thank you. The next question is from the line of 𝗗𝗘𝗠𝗔𝗃 Doshi from Whitestone Financial. Please unmute yourself and proceed with the question.
Yeah, thanks for the opportunity. Couple of questions. Firstly, earlier sometime you have mentioned about the opportunities in the renewable side for wind in Europe. I think some support infrastructure for wind turbine. Any update on that?
See, wind, we probably have not really discussed wind turbine construction and other things. While yes, we are aware of such a space emerging, but we have actually looked at the wind infrastructure, the wind energy market emerging worldwide, and vessels and support ecosystem that would be needed for that. Actually, the CSOV contracts we have taken is actually the CSOVs are ships which are for the wind market. In fact, so these are the first contracts that's come our way from that space. There are at least a few projects which we are in various stages of discussion in that space. That's a very exciting space. But getting into fabrication of wind turbine towers, I'm not saying that we have not looked at it, but not the area of most immediate focus, because slightly different type of business from what we are currently doing.
Okay. Now, secondly, you mentioned that for ASW, the sensors are now, government has asked to make it in India.
Yeah.
I mean, is there any company who is doing it, or if the technology needs to be developed, then can this again delay the work of ASW?
See, as I said, there are two sensors. One of those sensors for 16 vessels, 8 of CSL and 8 of the other company in India, are now coming from Bharat Electronics Limited. That technology is already done. Delivery dates, pricing, everything has been finalized. So that has been done already. So one of those sensors is Bharat Electronics. The second sensor is going to be split. Out of 16 numbers, 4 numbers are going to be developed in India between DRDO and Bharat Electronics Limited. And the balance 12 numbers for us and for the other shipyard is going to be developed in India by the Indian industry, private industry, along with foreign TOT partner under what is called the Make in India scheme, which is with a 50% Indian content. And that second sensor, as you rightly asked that question, is there a possibility of delay and other things? Yes, there is a possibility of delay because it's not yet developed. So that has been delinked from the project delivery schedules. But the first sensor is included in the project delivery schedule, and that is actually coming from Bharat Electronics Limited. I hope that answers the question.
Okay. And just one last question on the, so you have mentioned a lot of opportunities coming on the Europe market. So currently our order book is say 2,300 crore. At some point of time over next 2-3 years, can this become 8,000, 10,000 crore kind of order book on a running basis?
See, we would our order book position actually let me explain clarify on that. Ideally, I want an order book which is looking good from a aspirational turnover point of view, multiplied by around 4.5 to 5 times. This is an order book position which we need. Now, let me explain the logic from where it comes from. The naval projects, as I had explained, the naval project, there's a particular timeline under which it gets executed. The non-naval orders, typically a timeline, an outer timeline would be 34 months, 36 months from a date of a contract. If there's a series order, maybe first vessel, maybe 32 months, second vessel, 36 months. If there are more vessels than that, maybe 4-month interval kind of a thing. So when I build up my order book position, I would actually, what is an annual turnover I would like to do from that particular segment? The space which you are mentioning about the green or the European orders, if I'm targeting to do about 1,200 crores every year from that particular segment, then my ideal order book for that particular segment would be, let us say, multiplied by 4 times. So say 5,000 crore in that space would be good generally, if about a 1,200 crore is what I'm expecting. So the figure which you mentioned, if that part could go to about 8,000 crore, maybe 8,000 a notch on the higher side, but maybe something like a 5,000, 6,000 crore order book from Europe would look good and strong.
Okay, that's it from my side. Thank you.
Thank you. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead. Parimal, you have unmuted yourself. Please proceed with your question. We'll move to the next question, which is from Vijay Goel from ICICI Securities. You can unmute yourself and proceed with your question. As there is no response, we'll move to the next question from the line of Aditya Mongia from Kotak Securities. You may unmute yourself and proceed with your question. Aditya, I can see you've unmuted yourself. Please proceed with your question. As there is no response, we'll take that as the last question. If you have any further questions, we would request you to reach out to 𝐶𝐻 Shipyard Limited Investor Relations team. We conclude today's conference. Ladies and gentlemen, thank you for your participation.
Thank you.